Shilpa Kumar, of course, SGM and Head of Markets Group and Proprietary Trading Group at ICICI Bank joins in as well. And Shilpa, really good having you. Just wondering, a month and a half ago, we heard about the possibility of below normal monsoons. Then this talk about El Nino and, of course, the unseasonal rains that we've gotten, which have damaged crops in Maharashtra and probably some other parts of the country as well. How alarming could the situation be for agri-input-led inflation to rear its ugly head again?
Food inflation is obviously really critical for the country, both from the real impact that it has, as well as the impact that it has on financial markets. Now, given that RBI has actually come out and said nominal CPI is what they're going to look out for, and they've actually set a target on it, I think food inflation with a kind of 50% weightage becomes fairly critical to this whole inflation equation. And it's something we would watch very closely. At this point in time, we don't want to start assuming the worst on both monsoons as well as El Nino. But clearly it's something we will watch out for and keep a really close eye on.
But Shilpa, if you accept the, broadly, what people generally believe, that a great deal of the food inflation was because of mismanagement of the food economy, because the government did not offload from its huge stocks. So clearly, even if the monsoons are not as good as they were in the past, food inflation should not be as bad as it was in the past, if I may pardon me using that expression, if government manages the food economy better. So do you think there is some reason for us to hope that high food inflation is not a given?
I agree with you. I mean, I absolutely agree that it's not a given. And there are multiple factors that one would look at. So, the monsoons is just one part of them. Things like the minimum support price would be an equally important aspect. Third would be, where's the demand coming from? So is it just cereal which can be managed through food supply? Or is it, oft-quoted protein and vegetables and fruits which are contributing to that inflation? So it's a combination of many factors which will really play a part in this food inflation. But the only reason I'm somewhat hopeful is that I think this election, there is so much focus on the whole inflation debate that clearly any government which comes in will be very cognizant of inflation risks and will be wanting to act on those risks, and hopefully that should be good for markets.
Absolutely. I think no government can afford to take inflation easy. But one thing that is really contributing to inflation, at least if not directly, but certainly indirectly, is a high fiscal deficit. Will any new government really have much elbow room, given the fact that a lot of the fiscal deficit numbers that we've seen, are really a bit of smoke and mirrors, and there is a huge amount of, hidden and opacity in the fiscal deficit number. So in all probability, the final number will be much higher than the 4.6 or 4.8 that the present finance minister has talked about. So will that make it very difficult for the RBI to fight inflation?
Yeah, I agree that the final number that we see, there'll be two important parts to it. One will, of course, be that there are a lot of one-time items which are there. So, things like divestments, things like spectrum auction, things like, dividends from cash-rich PSUs. I think the real criticality of fiscal going ahead is for growth to pick up, for plan expenditure not to be, the scapegoat in terms of seeing cuts, in terms of managing the fiscal deficit. And if growth comes back, then you can see a good increase in tax revenues and a better balancing of the fiscal. So, in a sense, I think we have to move from the short-term management of the fiscal to a more medium-term management of the fiscal, and that is really going to be the challenge for the new government that comes.
Yes, certainly medium-term and long-term management of the fisc is what is more important. But in such a scenario, where does it leave the RBI? Should it kind of have an eye on inflation alone, or should it have an eye also on growth? And in that case, what are the kind of choices that the governor really has before him?
Right. So I think the Urjit Patel report, which pretty much the RBI seems to have been paying close attention to and adopting, I think that kind of suggests inflation is going to be a critical part of the whole equation. So if that is under control and there are no surprises over there and it is on path, then I think it gives RBI room to actually manage the growth side as well. At this point in time, if you look at inflation trajectory though, I think this year's target looks all right in terms of, staying around 8%, but the next year's target of 6%, I think there's a lot of factors to watch out for in terms of will we reach that target at the current level of how inflation is going. So not sure if there will be too much room if you look ahead 1 year down the line. But in the course of the year, yeah, inflation could trend down towards September and October. But the back of mind will always be the next year's target that is there on inflation, which might make it challenging in a sense for the Reserve Bank to support growth through interest rates.
If one were to shift attention from the domestic economy to the external side, the events in the Ukraine, would they really have an impact, and the subsequent sanctions also, would they have an impact really on oil prices? After all, a lot of the oil pipelines, gas pipelines to Europe do pass through that part of the world. So what does it mean in terms of, oil prices globally, in terms of our oil subsidies? Any views on that, Shilpa?
Yeah, I think oil price is obviously very critical input into our economy, especially the fact that we import a lot of it. At this point in time, I would say it does look like oil prices may not be such a substantive risk, and therefore we are not quite building that into our calculations. But I think the good news, Maithili, is that if you really look at what's happened on the current account deficit, I think the very good news is there's been like a good contribution on account of cut in gold imports, a good contribution on account of non-oil imports also, which have gone down. But I think the really important result is the growth we have seen on exports, and the currency being where it is has given a good support to that export number. So out of all these three factors, actually that's the one which is really critical for the country, because when growth picks up, one assumes the non-oil imports should pick up also to some extent, and gold also to some extent we need to bring back into that import number. So keeping the export growth supported is critical, and I think it's also giving us a little bit of leeway in terms of what happens on global factors, including oil prices, because at current levels it does look like we'll be sub 2% on current account deficit.
Leslie, I know we flagged this point off quite a few times, but there's a lot hinging on the overall impact of the elections, and certain experts and brokerages believe that it won't really kickstart the overall investment cycle, given that quite a few of the macroeconomic challenges continue to persist in the economy.
Oh, well, those challenges will persist, but I think what is important is what people are waiting to see really is some sense of leadership. At the moment, I think for the past few months, if not years, there's been the sense that there's nobody really at the helm. So the economy has been drifting and no action has been taken. It's only in the past few months, in fact, ever since Mr. Chidambaram returned to the finance ministry, that we've seen some action, but it's all happened too late. It's been too little, too late. So I think there's a sense of leadership, a sense of somebody taking decision, owning responsibility. Then I think sentiment is also very important. So yes, there will be no dramatic turnaround, but if we vote a stable government in, and I repeat, a stable government, doesn't matter what complexion it is, that's what people want to see, some sense of leadership. And if that sense is there, then I think you will see recovery happening, investment happening, and slowly growth will also pick up.
Shilpa, would you share the same view when it comes to the overall election impact?
Yeah, I think clearly, we do need a government that will kickstart a lot of the policy, action that is a prerequisite for our capital investment to pick up. And I think we've reached a stage, where it's critical from a number of reasons. I mean, for growth, from the fiscal point of view, from jobs point of view. So to my mind, actually, any government that comes in will really probably have no choice but to actually go down that path and to work on kickstarting a policy for growth in the economy.
Okay. Before we wrap this discussion as well, Shilpa, you briefly touched upon it. I just wanted your sense on how would you believe the election impact, or what the election impact could be on fund flows into the bond market specifically? Because, the last time around when the global macro worsened, we had a bitter pill to buy in the light of what happened to the currency as well as to the bond markets. Can the election impact and the sentiments that it can generate have a favorable impact on how funds flow into India and the bond markets?
I think what bond investors will look for is, two things. One is probably stability of the currency. The second will probably be what's happening on inflation, and is it going to stay under control, because that will give kind of a rate guidance to them. I think a favorable election result will definitely be rupee supportive and should assuage currency fears. But I think for bond investors to come into the long tenor bonds vis-a-vis the short term, which they have been actively investing in already, I think for that we will need to see some kind of stability and positive outlook on inflation.
Shilpa, you spoke about the strong performance on the export front as a silver lining. And yes, exports have done rather well, except for the last month. In fact, we saw exports not doing so well. In fact, the growth, in fact, reversed. And at the same time, we've seen China. They've widened the yuan trading ban. They've, in fact, engineered a sharp depreciation of the yuan. So can we really take export growth to be a given? Or should we also worry that if you have no internal growth, you have no external growth, does the CAD, the low CAD, is it really a sign of, low level of economic activity, or is it something that is artificially engineered? Or should we celebrate that, yes, we've got the CAD down?
No, so clearly I think we can do a little bit of both, which is, celebrate the fact that, CAD has come down. Also look at what has made it come down, and I think clearly the rupee being where it is has supported exports. So going forward, I think the impact of excessive capital flows and how they are managed in terms of keeping the rupee level around here, I think that will play an important role in exports going forward. So I think there's reason to celebrate the good news on CAD, but I think it's equally important that we remain focused on making sure that the current account itself stays at a level where India is not vulnerable to capital outflows.